Well, what is going on with this economy? You read the headlines today, seems like the economy, happy times are here again. We see prices falling from clothing to energy.
Wow.
There's also the underlying current of the US dollar, which has been, heading towards collapse for the past number of years. We've been covering it here on the show, the rise of the BRICS currencies. Is President Trump, is there anything he can do to stave this off? Maybe moving the US dollar to a gold standard. That would send shockwaves as all of these countries tried to ditch U.S. treasuries, and a big middle finger to President Trump with all of these tariffs. So what in the world is going on? Well, someone who has his finger on the pulse of all of this is Kevin DeMeritt. He's the CEO of Lear Capital. He's been knee deep in research project right now, specifically around U.S. currency and the trade war. And we want to welcome Kevin back to the show. Kevin, great to see you.
Yeah, thanks for having me back, Clayton.
No, you and I were talking just, the other day, and you've been said, well, Clayton, I'm knee deep in this project. I've literally been researching all of these pieces of this trade war here and what this means for U.S. currency. So we'll get to that in a second. But I just want to read you some headlines from today, if I can. So NASDAQ jumps 20% in 24 days. Is that too fast? That's one headline. Bloomberg, U.S. stocks edge higher as ebbing consumer prices buoy optimism. So people are excited that, clothing prices have dropped, energy prices have dropped, food prices have dropped, egg prices have dropped, a lot of these things. U.S. Treasury shocks with second biggest surplus in history. That's a stunning headline. And then Tariff-mageddon canceled. U.S. inflation stays cooler than expected. Prices up 2.3%, the smallest annual increase since Biden's 2021. So when you read these headlines, you see these numbers, stock market surging, consumers seem like they're happy again, they're ready to go out and spend some money. Seems like good stuff here, but there's like an underlying current that I think you probably have your finger on, right?
Yeah, let's take two of those things that you're talking about and kind of break them down a little bit. So the budget surplus. Fantastic. I'm glad we had a budget surplus. I wish we could have one every single month. But the budget surplus in April, if you're ever going to have a budget surplus, it probably is going to be in April because we all send in our tax payments, the quarterlies for corporations and so on and so forth. So there should be a surplus in April every single year. There isn't. And now that there is one, everybody's shocked. However, if you look at the deficit, in the first 4 months, fiscal 4 months of the year, which isn't the first 4 months of this year, the fiscal year for the government is a little bit different. It was $840 billion deficit. In the first 7 months, it was over $1 trillion. And just the interest payments on the debt of $35 trillion is $1 trillion a year, which is higher than all of the defense spending put together. So it's nice that we have a budget. Look, I love it. And part of it came because of these tariffs, and part of it came because we all send in our tax checks to the IRS. But that doesn't mean this is going to continue. I'd be shocked if it did, because there's a lot of work to be done to try to figure out how to get this to a balanced budget. Secondly, when you're looking at clothing and eggs and everything else starting to fall off, I would have expected this to happen, because the definition of inflation is too much money chasing too few goods. And so people say that, but they don't break it down. So when you say too much money, you can think of that too much money was all the money that was printed in COVID, right? So you had this COVID situation, everybody got some free money, businesses got free money, and so you have too much money chasing too few goods. The too few goods part was also part of COVID because you had a supply chain problem. You just couldn't get products from all around the world. People in the United States couldn't go to work. So you had supply chains problems. So you had too few goods. The one that people don't get is the chasing part. And chasing in economics is really called velocity. It's the velocity of money. The velocity of money is how many times does a dollar change hands over the course of a year? And that's important because if there's no confidence or little confidence in the economy, or little confidence that you're going to continue to make money or you're going to have a job, that's going to start falling off a little bit. How good do we feel about the economy and how fast is the economy growing? You feel a little bit better, you're going to go spend a dollar a little bit quicker. That velocity is slowing down. You can see it in the numbers. So The government has the velocity number. You look at it, and let's say it moved from 7 to 6. It's a big drop. If it goes to 5, you're probably in a recession. So you're starting to see people getting a little bit less confident about where the economy is going, maybe where the stock market, it's very high right now. Maybe they're not, spending as much money there. There's a lot of money in cash sitting on the sidelines. We need that velocity back if prices are going to stay high. If it stays lower, then the prices are going to continue to come down.
I haven't heard anyone talking about that. I mean, this is important. So we can talk about, stock market surging. The Trump administration can say, look, egg prices are down. All of this doesn't mean much if people are not trading those dollars. And so the velocity has dropped. The chasing has dropped. I haven't heard anyone really talking about that. It's a really important point. So, and I know President Trump recently has sort of hinted that things might get worse. Things might get bad. So what is he seeing specifically? Is it the velocity number? Is he also seeing the fact that all of these countries are trying to dump the U.S. dollar? China getting rid of U.S. treasuries, trying to dump it. Would this push President Trump to say, hey, maybe it's time we put the U.S. dollar back on a gold standard? There's been a lot of rumors about that at the beginning of the Trump administration. Fort Knox, trying to make sure we have a good accounting of the gold that we have in the United States. But if all these BRICS countries are going to ditch the U.S. dollar and they're buying up gold, we're going to be screwed.
Yeah, I think what he was trying to refer to is the you've got a situation right now where the U.S. dollar is down 27% since 2000. If you just calculated inflation for each year, your dollar has fallen by 27%. That's painful for everybody. At the same time, on an international basis, a lot of central banks have been selling U.S. dollars and then purchasing gold. So that's why you've seen central bank purchases of gold at record highs. This will be the 4th year in a row if it continues, and it has. And they've liquidated U.S. treasuries. What can we do to stop that? There has to be some confidence built back into the dollar. But what the previous administrations have done is weaponize the dollar. Russia, China, all over the globe, we've weaponized the dollar to try to control countries and even companies. If, for instance, in Iran, if you were a private company or a public company doing business, we might kick you out of the SWIFT banking system and weaponize the dollar to do things like that. And people are
we've been a bully. We've been a bully. All through Africa. I mean, we've been a bully with the U.S. dollar. I mean, it's not surprising that chickens are coming home to roost, right?
Yeah. So you're just getting this enormous amount of liquidation. There was an article in Forbes magazine talking about China, Korea, and Taiwan holding $2.5 trillion of our treasuries. That used to be $4 trillion. Now it's $2.5 trillion. It continues to fall. And if they liquidated it all at once because they were just annoyed with these tariffs, it would have major repercussions. That would be inflationary because you're back to the too much money. All that money would come back to the United States. You have too much money chasing too few goods. Dollar would fall. Everything would go back up in price. So President Trump is saying, hey, how can we combat this? And one of the things that he was talking about, and you referenced, was, hey, this gold in Fort Knox, if it's really there, can we use it to back a little bit of the dollar? Because if you do that, then you can't print money willy-nilly without backing it by whatever percentage that you have backed it by gold. Now, why do we know this works? Because when we weaponized the dollar against Russia, Russia's ruble immediately fell. President Putin came out and said, hey, look, we're going to back a little bit of it by gold. It jumped right back up 20% almost immediately. Another great example would be BRICS. The BRICS countries have said that they wanted to back that currency by either commodities and a little bit of gold. And if that happened, that would strengthen that currency against ours. And it would just be a great play on their part, because not only have they been purchasing a lot of gold to potentially do this, but our dollar would just fall off a cliff if we didn't do the same, right? So I believe that he's thinking about it the right way. That if we got ahead of this and we could back the U.S. dollar by gold, that would strengthen our dollar. We would continue to have the world's reserve currency and all the benefits that come from that.
As you and I were talking the other day about this and all the research you've been diving into is that really these trade wars are a currency war. And, I hadn't really thought about it that way, but at the end of the day, that's really what it is, right? We'd hear about tariffs, we hear about the trade wars with the UK, with China, with whatever, but it really comes down to the US dollar as a currency. And that's really where the war is. Can you explain that?
Yeah. And this is where I think the conflict is with President Trump and Jerome Powell. It's not just that Jerome Powell believes that inflation is going to go back up. I think if we got him behind closed doors and he really looked at the velocity of money, looked at all these other situations, he would say, yes, inflation is coming down. The problem I have is how much of an inflation effect are we going to have from the 10%, 15, 20% tariffs? And trade wars turn into currency wars. If you look at history, when people say there's a trade war going on, the most of the people that I speak to say the trade war is I put 10% tariffs on you, you put 10% or 15% tariffs on me, I get ticked off, I put another 10%, and we have this tariff war going back and forth. That's not typically what happens. Typically what happens is that happens, and about 6 to 9 months later, those countries say, how do I benefit from lowering my currency to sell as many goods as I used to the United States? So if you think about country A being the United States, putting tariffs on country B, which would be China, of 10%. And China says, okay, I'm going to put tariffs back on you of 10%. Now you're even again, in the United States says, well, I'm going to put 10% more back on you. Now the net is 10% to China. China says, look, I don't want to continue to play this tariff game, so I'm going to stop. What I'm going to do is lower my currency by 10% against the US dollar, and my goods in the United States are at the exact same price as they were before the 10% tariffs. So how do we know that this happens? Because if you go back into 1930, there was a tariff war called the Smoot-Hawley Tariff Act in 1930, which was the United States government placing tariffs on 20,000 imported goods, which really worsened the Depression. But what happened after that happened was Britain abandoned the gold standard in 1931. Why? Because they wanted to drop their dollar, and it had the effect that they wanted. It dropped their dollar by 30%, negating all of the tariffs that we had placed on all of those goods. In retaliation for that, the United States got off of, they confiscated gold in 1933 at $20 an ounce and revalued it at $35 an ounce, which dropped the dollar by 40% to retaliate for the 30% drop in that currency.
Made everyone hand in their gold.
Yeah, at $20 and then revalued it at $35. Hey, if you would have just held on to it, you would have picked up a 75% increase. But if you move this forward, Clayton, then in 2018 and 19, we placed a bunch of tariffs on China. Trump placed those tariffs on China. And what happened? In August of 2019, China let the yuan weaken past $7, 7 yuan per dollar, for the first time in over a decade. So for the first time in a decade, we put tariffs on China, and they let their currency devalue about the exact amount that we increased tariffs. If people just opened up a book and get a little educated on trade wars turn into currency wars every single time. The tariffs can keep going back and forth as many times as you'd like. Those are easy. Then somebody says, okay, I'm done. 6 months, 9 months later, whatever's going to happen here in China with this trade situation, I would almost bet you that you're going to get a 10%, 15% decrease in the value of the yuan. They already did it in 2018 and 19, and they would do it again. And that's why people have to be concerned about the value of their currency, because everybody starts to devalue at that particular point, and you need something to protect yourself against the devaluation.
Yeah, that's why, like you and I were talking, if President Trump can move the U.S. dollar back towards a gold standard and force these countries to not be dumping the U.S. dollar, which they've been doing at a record pace, that's why you're seeing the rise of this BRICS currency, and you're seeing you're seeing the plummeting of the U.S. dollar. I think that's the real story here under all of this. I think, so we can talk about egg prices, we can talk about clothing prices, energy prices, but it's really, where does the US dollar sit on this global stage right now? Fascinating.
Yeah,
I
look,
think it's,
the stock market's like this, teenager. It's reacting to things on a daily basis. Today it's down, yesterday it was up. I mean, it's had massive fluctuations for the first, 4 months of 2025. If you're going to try to play the stock market right now, almost impossible because you don't know what's going to happen. But what are the factors that are going to drive it long term? It's going to be the debt in the United States, which Trump is trying to fix, and it's going to be the value of the dollar. Everybody's talking about the value of the dollar because you have a lot of countries out there starting to sell it. We're at kind of the end of the periods that world reserve currencies typically last. So there's been 7. They typically last about 107 years. We're at 112 years for the US dollar. You're starting to get to the end of the time periods that usually, those reserve currencies last. And there's a lot of reasons for these countries to be mad about, how we've weaponized the US dollar. People need to understand how that affects them, how it affects our 401k, how it affects their retirement and all those kinds of things. Because if inflation's just running 4% and you try to retire, you calculate that out over the course of 20 years, it is a major impact on the value of the purchasing power of your dollar. So if Trump can fix that and he can figure out how to pull the deficit down a little bit and pull debt down a little bit, the government's going to be in much better shape. The dollar's going to be in much better shape. And then you can feel more comfortable about the long-term value of your dollars in retirement. But if you don't believe that can happen, and that's a big if, then you need to do something with your money to actually protect some of it.
Yeah, and that's where, you and I, well, we see eye to eye on buying gold, buying silver, buying real estate, buying tangible assets. Play around in the stock market a little bit, that's fine, but to have those real tangible assets. And then gold prices, I think we had Goldman Sachs out with a report. They're predicting $4,500 an ounce for gold. Goldman Sachs?
Goldman Sachs said in a year, the price of gold could be $4,500 for all of the reasons that you and I are talking about right now. They said trade wars turn into currency wars. The US dollar is already taking a hit on an international basis. And what are those central banks replacing those dollars with? Gold at a record level. Who are the biggest buyers? China, Brazil, Russia, India, everybody who's part of the BRICS countries. But now you're starting to get other countries starting to sell off, like Japan. You don't really typically see Japan selling off large amounts of treasuries. You just started to see it. Again, trade wars turn to currency wars, and here's Japan selling off our dollar. So don't be surprised in 6 or 7 months to see potential a recession in the United States, which would devalue the dollar even more. And that's the pain that I think President Trump is talking about. People need to learn how to protect themselves and learn about what's going on right now in the long term, not just what's happening in the short term in the stock market and what's happening with inflation.
Trump has been dropping these acorns, about what he thinks is coming in the U.S. economy. So I think he knows what's about to happen with the U.S. dollar. Kevin, you. I think you put together a report for our audience, right, on this currency war thing. You've been working on it for the past couple of weeks. Am I right about that? I don't want to jump the gun.
Yeah, no, we're just finishing it up. Like I said, I got paper strewn all over the place. So if my thoughts were a little off, I've been trying to put this together so people can understand it and try to react to it and protect themselves, because the government is not responsible for your retirement. This isn't about fear. It's about reality. They're not there to help protect your retirement. They're going to do what they do, and people need to do what they do, and that's education. That's why I love your program. It's you educate people and people can make their decisions. So I think we've put a great report together talking about the dollar, talking about debt, what factors those two things have and influence the price of gold, why Goldman Sachs is talking about $4,500 gold, how to protect your retirement accounts, 401ks, IRAs, things like that, and physical delivery for your savings outside of those retirement accounts. So that's available completely free. The report will be done tomorrow, so we can start electronically sending it out to people. So if people go to learredacted.com or call us at 800-613-3557. Then we'll get that report out to them immediately, absolutely free of charge. And all the listeners on your program also get the $500 in their account as a credit that they can use against free shipping or all of the IRA fees. So that's just something we always do on your program as well. So the free report and the credit are all going to be available for all of your listeners.
Awesome. I appreciate it. And so does the audience as well. Kevin, great to see you. Hopefully people are paying attention to this, because if President Trump's dropping these little acorn nuggets about what's coming in the economy, people better pay attention. Like stocks can go up, stocks can go down, but people need to protect themselves. And we've been warning for years about the collapse of the US dollar, and it doesn't seem to be changing anytime soon. Kevin, great to see you. We appreciate your insights. This is really fascinating. Thank you.
Yeah, you bet. Thanks for having me.